a major shift is happening in the global macro landscape. Today, we dive into the increasing pressure on the Bank of Japan for a rate hike in June, a move reportedly urged by U.S. Treasury officials. Coupled with a dramatic crash in oil prices, this situation is critical. By the end of our exploration, you'll grasp how the US-Iran peace deal and external policy pressures are pushing the BOJ to act, and what that means for your investment portfolio. For months, the Bank of Japan has adopted a cautious approach to interest rate normalization. Yet, this slow adjustment is now under the international spotlight. Investors worldwide are growing skeptical of Japan's fiscal credibility, leading to a marked retreat from long-term Japanese government bonds. This precarious situation forces the BOJ to balance domestic economic stability with rising external demands for higher rates to bolster the yen. Recent reports reveal that U.S. Treasury Secretary Bessent is directly urging the BOJ to raise rates as soon as June. The main concern? To avoid a Japanese version of the Truss crisis, a reference to the UK market collapse in 2022 caused by fiscal expansion without monetary backing. At the same time, geopolitical shifts are adding complexity to the inflation outlook. With Pakistan announcing a peace deal between the US and Iran, WTI crude oil prices have dropped below $81 a barrel. This sudden decrease in energy costs could set a more dovish tone for the FOMC, just as the BOJ feels the heat to tighten. On social media platform X, traders are reacting swiftly and intensely. As news of the Iran truce spreads, gold prices have surged, reaching the 4,300 level. Market participants describe this as a classic safe haven flow, even as oil prices plunge. One prominent trader pointed out that the path to lasting peace hinges on addressing Iran's nuclear program. Meanwhile, all eyes are on the yen as the market weighs the BOJ's possible June decision against falling energy prices that might allow the Fed to maintain a patient stance. A concerning trend is emerging for Japan's Ministry of Finance. Global bond investors are pulling back from the JGB market. Doubts about the BOJ's pace of normalization and worries over Japan's fiscal expansion are driving these withdrawals. This erosion of credibility is a significant factor in keeping the yen weak. Analysts caution that if the BOJ continues to hesitate, the market might take drastic measures, leading to higher yields in a chaotic manner. The Nikkei 225 stands at a critical juncture. While lower oil prices typically benefit Japanese importers and consumer sentiment, the looming threat of a sudden rate hike and rising JGB yields present headwinds for equities. The market is acutely sensitive to the coordination between the US and Japan. If the BOJ yields to US Treasury pressure, we could witness a major revaluation across sectors, particularly in financials benefiting from higher rates, versus exporters who might fear a strengthening yen. In the currency markets, US dollar to Japanese yen remains the key battleground. The US-Iran deal and subsequent oil crash have complicated the dollar's trajectory. Lower inflation expectations in the US could weaken the dollar, but the pressure on the BOJ to hike may provide a potential support level for the yen. Gold's surge to 4,300 underscores the market's fragility and its need for protection against geopolitical surprises. Traders are now closely monitoring whether the $81 support for oil becomes a new ceiling. For individual investors, the current climate demands heightened vigilance. The coordination between the US Treasury and the BOJ is a rare signal that should not be overlooked. Risk management is crucial as we approach the June policy meetings. Keep a close watch on JGB yields and the $81 level in oil. It's advisable to steer clear of over-leveraging in yen-sensitive trades until the BOJ offers more clarity on its path to normalization and how it plans to avert a fiscal credibility crisis. Our AI has analyzed the current data and modeled 3 potential scenarios. In the base scenario, the BOJ raises rates in June due to external pressures and fiscal concerns, leading to moderate yen appreciation and stabilized bond yields. In the bull scenario, a decisive hike coupled with falling U.S. inflation from the oil crash leads to a sharp drop in U.S. dollar to Japanese yen. Alternatively, in the bear scenario, if the BOJ remains stagnant, we could see a loss of fiscal trust, a Truss-style spike in JGB yields, and renewed yen weakness. Governor Ueda's rhetoric following the latest stance from the U.S. Treasury will be the key trigger. In summary, first, U.S. pressure for a BOJ hike is intensifying. Second, the oil crash below $81 is a game-changer for FOMC policy. Lastly, global funds are withdrawing from JGBs, signaling a risk to credibility. What do you think the BOJ will decide next? Share your thoughts in the comments below. And don't forget to like and subscribe for more in-depth analysis of the Japanese macro scene. We'll see you in the next video.